This week, people in Indianapolis paddled kayaks down their own streets. The White River rose higher than it has in more than 30 years. At least 7 people died, and in the coming days, thousands of families will discover a second disaster, this one on paper. The insurance on their home does not cover floods. It never did. A standard American homeowners policy excludes flood damage entirely. For that, you need a separate policy. In the county that just went underwater, one home in 136 has one. The other 99% have nothing. Here's the design behind that number. In 1973, Congress tied mandatory flood insurance to a line on a federal map. Inside the line, your bank will not close a mortgage without a flood policy. Outside the line, silence. And everyone reads silence as safety. Since then, the rain has changed. The line mostly has not. Today, about a third of America's flood claims come from outside it. First, the water. Starting on the 11th of August, parts of Indiana took more than 11 inches of rain in 3 days. The White River crested at a record 24.9 feet in Anderson, the worst flooding the state has seen in over 30 years. At least 7 people died, among them a 4-year-old boy and an 18-year-old student on his way to his first semester. More than 350 people were evacuated. At the peak, a third of a million homes had no power. In Indianapolis, a section of road simply collapsed. The president signed an emergency declaration the same weekend. Now the second wave, the paper one. Fewer than 1% of Indiana households carry flood insurance, about 16,000 policies for 2.5 million homes. Everyone else is left with federal disaster aid, and that aid has a ceiling. This year, roughly $44,000 per household. The average flood insurance claim, for comparison, pays out about $83,000. Federal help is real. It is also a fraction of a ruined house. The usual story writes itself. Freak weather, terrible luck. But hold that against the record. Houston, 2017. Hurricane Harvey floods the city, and about 80% of the damaged homes turn out to be uninsured for flood. Kentucky, 2022. Same discovery. Vermont, 2023. Same again. Indiana, this week. Same. When the same surprise repeats in state after state, year after year, it stops being a surprise. It's a design. And this particular design lives in 2 laws and 1 map. Start with why flood insurance is separate at all. A fire burns one house, a flood takes the whole street in one night. Losses that arrive all together are the kind private insurers cannot carry, and by the 1960s, they had largely walked away from flood. So in 1968, Congress built a public insurer for it, the National Flood Insurance Program. One problem remained. Almost nobody bought the policies voluntarily. So in 1973, Congress added the push, mandatory purchase. But a duty needs a boundary, and Congress pinned it to the federal flood map, the special flood hazard area, the zone with a 1% chance of flooding in any year, the 100-year floodplain. Inside that zone, any mortgage touching the federal system, which is most mortgages, requires a flood policy, checked at closing, enforced for the life of the loan. Outside the zone, no duty, no check, nothing. On paper, that's elegant. Force insurance exactly where the risk is. But watch what the line does to people. Inside it, and the zone holds only a small slice of a state's homes to begin with, people buy because they must. Outside it, the absence of the requirement becomes information. The government looked at my street and didn't make me insure, so my street must be safe. The map stops being a measurement and becomes a verdict. House prices read it, builders read it, families read it, and so the entire question of who is protected from the most common disaster in America comes down to which side of a drawn line your driveway sits on. Which would work if the line were true? It isn't, in 2 ways. First, it's old. Many of the maps were drawn decades ago, and they are mostly built around rivers and coasts. The violent short rainstorms that drown a street in an hour are barely in them, and a changing climate isn't in them at all. When researchers redrew the maps with modern rainfall data, the count of high-risk American properties went from FEMA's 7.9 million to 17.7 million, more than double. Around 10 million homes carry real flood risk and sit outside the official line. No mandate, no warning, and no extra rules when a developer builds there. FEMA's own claims history says the same thing more simply. Over the last decade, 29% of flood claims came from outside the high-risk zones. Roughly a third of the water ignores the map. Second, the insurer behind the line is itself underwater. The program owes the U.S. Treasury more than $22 billion. It collects about $4 billion a year in premiums and pays out nearly $6 billion. Congress already forgave $16 billion of its debt in 2017. The hole simply started refilling, and the whole machine lives on temporary extensions. The current one, the 35th, expires this September. During a government shutdown last year, the program lapsed for 43 days, and in the entire United States, no new flood policy could be written at all. So, the duty is pinned to a line. The line has lost sight of millions of at-risk homes, and the fund behind the line runs at a loss nobody wants to price honestly. Other countries drew this differently. 3 designs, and each pays with a different currency. Each gives up something different. Design 1, France. Delete the question, am I in the zone? Since 1982, every property insurance policy in the country carries a mandatory catastrophe surcharge, flood, drought, earthquake, all of it, backed in the end by the French Treasury itself. Nobody is uninsured because nobody can opt out. The map no longer decides who is protected. The currency is the risk signal. A dry hilltop house subsidizes a riverside villa. Building in a floodplain costs nothing extra. And the climate bill arrives anyway, just through the back door. The surcharge was 5.5% when the system started, 12% by 2000, and 20% since last year after 8 straight years of deficit. Everyone is covered. Nobody is warned. Design 2, Britain, a subsidy with fuses. Since 2016, a levy on every home insurance policy funds a pool called Flood Re that keeps premiums for flood-prone homes affordable. But 2 fuses are built into the law. Homes built after 2009 are deliberately excluded. Insure the floodplain houses we already have, but never reward building new ones. And the whole scheme self-destructs in 2039 by statute. It is legally a bridge, not a home. The currency is the holes and the countdown. Landlords, leaseholders, and new builds fall outside the umbrella. 11% of New English homes are still being built in flood risk areas anyway, and the scheme's own chairman admits that if it's still needed after 2039, the market has failed. Design 3, America's newest experiment on itself. Tell the truth. Since 2021, the flood program has been repricing every policy to match each individual house's actual risk, not its zone. The currency is what truth costs. Riverside premiums multiply, members of Congress file bills to cancel the repricing, and owners respond to honest prices by dropping coverage altogether. So the gap this was meant to close widens instead. A fully honest price does one more thing nobody wants to say aloud. It quietly writes off whole streets. The price itself says, do not rebuild here. Notice the triangle. Someone must absorb flood risk. Everyone a little with the signal muted. France, the risky few subsidized with fuses and a timer. Britain, or each house carrying its own truth and the political revolt that follows. The American repricing. Every corner has a defender. The one design with no defender is the current one, a duty pinned to an aging line that a third of the water no longer reads. So, come back to the kayaks on an Indianapolis street. The water did not check the map on its way in. The families outside the line weren't reckless. They were told by the silence of the system itself that they were safe. That's what a line does when a law is pinned to it. Inside, it protects. Outside, it reassures. And reassurance, unlike protection, costs nothing until the day it costs everything. So the next time a flood is in the headlines, and there will be a next time, the revealing questions aren't about the rain. They're about the line. Where is it drawn? When was it last redrawn? And who pays on the day the water crosses it? Your country has lines like this too, whatever it calls them. Seismic zones, fire maps, coastal setbacks, every one of them is a rule wearing the costume of a fact. And rules, unlike facts, have an age.